Forex trading involves significant risk of loss and is not suitable for all investors. Please pause the screen to read the full disclosure.
Thank you for joining us. My name is Ari Estrada, President of FXCEM. Today we will be going over the ABCD pattern. Topics covered: what are ABCD patterns? How to identify them on a chart? Variations of the ABCD pattern. What is an ABCD pattern? Markets have what's called memory. So certain moves get repeated time and time again. The ABCD pattern is a price structure where each leg is equal in both price and time. This is a pattern that repeats itself over and over again in all markets. So we'll start with an A point, B, retrace down to C, and up to D. So AB here equals CD in both price and time. We have a bearish and a bullish version of it. So here in the bearish, we're going to be selling at D, and here we buy at D in the bullish version. What's so important about this? Well, ABCDs measure price, they measure time. They give us an entry price. They give us an idea of how long we could possibly wait to make a trade. They also allow us to manage our trades as we're in them. Here's an example of an AB equals CD. And here we have it equal in both price and time. So A to B, and all we're going to do is draw a line from point A to point B. What we can do is either copy and move it, or we can just move the line. And where point A was here, we're just going to put this line and have point C. Now, as you can see, point D occurs right at the same time and right at the same price. So the result of this trade was this. So AB equals CD here in both price and time. Now, most cases, actually I shouldn't say most, but in a lot of cases, ABCDs are going to give you a retracement that you can take advantage of. Not every single time are you going to see this massive move, but sometimes you do. But it's definitely a good pattern to use along with maybe some of the other analytical tools that you're using. Now here we have an example where there is an ABCD pattern. It's not an AB equals CD. So let me explain that. We have point A to point B. So right there, there's the price and time that we're looking for in the C to D move. So what do? We draw from A to B, then we just copy it, move it over, and then we see C, and this is where D was supposed to be, where we were anticipating it. But we see price shot down earlier, and it shot down below the move that the AB made. So what do we do from here? We're going to take a Fibonacci retracement tool, and we go from here where we thought D was going to be up to C. As soon as we see a breach here, that's what we'll do. And we're waiting for two levels, 127.2 or 161.8. And these are Fibonacci extensions. So from here up to C, and right here it actually hit 127.2. Now let's see the result of this one. Hit 127.2 here, and immediately shot up, then continued down. This is where managing your trade becomes very important, but the purpose of this is to show you the ABCD pattern and how you can find opportunities to take some pips. So A to B, copy it, bring it over. C, we think D is going to be here. It actually ends up being here, and we find out by using our Fibonacci retracement tool and seeing the extension at 127.2, shot up, and then continued down. Let's go over some of the guidelines. CD will be the same move in price and time as AB. That is an AB equals CD pattern. Sometimes CD will be longer than AB in price by a Fibonacci number, 127.2% or 161.8%. The BC leg is always shorter than AB. It's called a retracement. So an AB equals CD will occur about 40% of the time. The other 60% of the time when we have an ABCD pattern, CD becomes a Fibonacci extension of AB. The C to D move can be 127.2% or 161.8% of the AB move. So let's go over some areas to eliminate risk or to take profit. Point B is usually a good rule of thumb for the first area to eliminate risk. I always say, look to the left of the chart to see where other support resistance areas are on different time frames so that you basically already know in advance what areas the market has hit and bounced off of before. And areas where you see that it's either support or resistance around the same place, those are strong areas to look out for. Also, some people do Fibonacci retracements from C to D to look for potential profit targets. If the trade was with the trend, you're going to look for 61.8% retracement and beyond. If the trade is against the trend, look for 23.6 or 38.2%. But always make sure the trade is worth the risk before entering it. Please always remember to manage your risk because nothing is 100%, and the information provided should be used as a guideline. Thank you very much for watching our video. For more information or to set up an account, any questions at all, please email us at admin@fxcem.com, or you can give us a call at 888-345-9120. You can always Skype me at estrada.ari. Please check us out at www.fxcem.com. Happy trading, everyone, and I look forward to speaking with you soon.